Hello, welcome to my YouTube channel, Money, Life and Investing. Today I'm going to talk to you about the recent 13% layoff that Meta announced and how it's going to impact the stock, and is it good for the investors? Without further ado, let's get started. Meta announced more than 11,000 employees to be let go, which is up, which is about 13% of its workforce, um, which was not good to the Meta employees, but for the stock market was very good. As you can see, for last 5 days, it, the investor liked it, and the the stock went almost 24%, like in last 5 days. So, in my view, I believe for short term it may look good, but it doesn't address the serious problem that Meta has for its investor. So let's get into that. So for that, let's talk about their recent quarterly earning, which they announced on October 28th, 26th, actually. Um, as you can see, the revenue is down year over year by 4%, and costs and expenses were up 19% year over year. In general, you would want the revenue to be increasing and the cost and expenses to be down, but for in Meta's case, it's the other way around. Um, we will get into why that is happening, but getting back to the quarterly result highlights, they said the headcount is as of September 30, 2022, they have around like 87,314 employees. So if you take 13% out of it, it's just 11,000. So so now they, as you can see, their cost and expenses will keep on increasing, the revenue is going down, and will this reduction in their workforce will address the problem and will bring the company back to its golden days? The answer is no. Um, so if you the reason is this is my thought process. In my view, if I look at their earnings slide, it talks about expenses as a percentage of revenue. If you look at the Q3 results, Q3 graph, it says like almost 12% is spent on general and administrative expenses, and this accounts for the salaries, lease and whatnot. Like so you can see from Q3 2020 to up until now, it only increased by 4%. So basically, basically, I don't see anything by reducing the workforce. There's nothing going to meaningfully add value to the investors. It may add value to a quarter, perhaps. Maybe in a quarter they may show, pull off and beat the estimates, but for a long run, that's not adding any value to the company. The reason is, if you look at it very carefully at these charts again, the 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 main problem is they've been spending a lot of money in their research and development activities since 2020. So 2020 they had 22%, and in Q3 they were 33%, which is like 10% increase. So if I have to address their problem, because if you look at the rest of the areas, like this is all like flat 20%, right? And this is like rough, like 12, 14, so around like 12 to 14. And this is like same, similar. It's only this area has been increasing like quite a bit. So I believe this is the major area of concern, not the workforce, right? So, so, so the reason is the reason I'm also saying why this is the major concern, because if you think about it, their revenue streams, they have four streams. One is advertising, one is other, which is abysmal revenue, and there is a family of apps revenue and their reality labs revenue, right? So if you think about it, they've been spending a lot of money in research and development, because they've been spending those money in the virtual reality, which is the reality lab. They've been spending a lot of money on buying servers, improving the infrastructure, buying hardwares and softwares, um, and basically pumping a lot of money into this reality lab so that it can produce a lot of revenue. But if you think about it, if you look at their revenues, advertising is being like constant, anywhere from 25 billion to 32 billion, and family of apps revenues similar, like 25 to 32 billion. Other revenue similar range, 168 to, you know, 150, 150 to 215 million. So kind of sort of the same. So it's the Reality Labs revenue which is being significantly down, as you can see from Q4 20 to 2022. It's been like almost 3 years. Their revenue is being down. Like they didn't, and for the last 4 quarters, it's been down like quarter over quarter. It's been down, and then operating income is as well as being, it's significantly down. And you can see their operating margins. Usually it's around like 46 to anywhere between 30 to 46%, but it has gone like 20% now, which is alarming. So so again, so basically, if you look at these facts, it's very clear the issue is not with their workforce. Issue is with they spending a lot of money on these reality labs, and but then it's okay to be spending, but the problem is it is not yielding the revenue that one would like. This again, my thesis is also backed up by this letter that Mark Zuckerberg put together the other day, where he said he takes complete responsibility. I want to take accountability for this decision, for how we got here. So, and then he says, how did we get here? At the start of COVID, the world rapidly moved online. So basically, online, the virtual reality, where he thinks everybody would meet virtually, and surge of e-commerce. So, and then he was thinking they can make this virtual reality, e-commerce, blah. So therefore, he invested significantly. So I made a decision to significantly increase our investment. But unfortunately, this did not play out the way I expected. So, but he already says very clearly here, he thought this virtual reality metaverse is going to be a big thing, but then it did not play well. This is also backed up by their uh, uh, outlook statement. We will get to that in a minute. So just to summarize the problem, this reducing of work force to me is not going to solve Meta's issue of being profitable. So for them to be profitable, I think the issue lies within these reality labs, specifically like this metaverse virtual reality investments, and that's where the problem is, and it's very clear from Mark's email. He himself is acknowledging the fact it is not looking good. So now getting back to their CFO outlook commentary, they basically, if you look at it very carefully, he says we expect 2022 capital expenditures blah 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 to be in the range of 32 to 33 billion. And then for 2023, we expect capital expenditure to be in the range of 34 to 39 billion, driven by our investment in data centers, servers, network infrastructure, and increase in AI capacity is driving substantially all of our capital growth in 2023. So basically, what he's saying is what the CFO is expecting is um, so if you go back here, as you can see from Q3 2021 to 2022, the capital expenditure has like uh, exploded. Basically, it went like 5, 6 times since 2021, and they expect 2022 expenditure to be, 30 to 34, and then to be even more in 2023 in the range of 40 billion. So it is very clear they are saying keep saying that they are going to keep spending, right? And Mark Zuckerberg is saying alluded to the fact that he thought this would be a good thing to invest in this virtual reality, but it is not yielding good results. But I believe they are caught in this middle that they have to finish it off for them to yield any meaningful result. So therefore, they don't have any option but to keep spending. So what does that mean? So they does it mean it's okay for anybody to spend, right? But like when you spend, you would expect some revenue out of it. So what is that they think? So the CFO thinks the Reality Lab expenses are included in our total expenses guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year, which is a very important statement. They are already saying that in 2023 they are going to see loss in revenue. Um, it's going to be even less. So basically, they're thinking this trend is going to keep the way it is, right? And then moreover, what they say is beyond 2023, we expect to pace Reality Lab as well. So basically, they're saying 2024, beyond 2023 as well, they are going to increase the Reality Lab investment such that we can achieve our goal of growing overall company operating income in the long run. So they think, so basically, the spending is not done. They think beyond 2023. So into 2024, they are keep going to pump more money into Reality Lab, and then they already say they are not expecting any profit out of it. So, so, so so that sums up. So I believe this 13% layoff is not going to add anything to investor. Um, they have a real issue in the sense they're pumping a lot of money to the Reality Labs, and but the Reality Lab is not going to be profitable until beyond 2023 and even more. No one knows. So I would, as an invest, if I have to invest in Meta, I would be very cautious. Even though it went 24% in the last 5 days, which is good for the existing investor, but I'd be very cautious. I would. I am not an investment advisor. You should consult with any your personal financial advisor for making any investment decision. But in my view, I would watch this stock very closely for next few quarters to see how their performance is going to pan out. And if you're really interested, still interested, and you believe um, this this virtual reality is going to be next big thing. I would then use any down opportunity to dollar cost average and watch very closely. I wouldn't go one shot and invest. Rather, I will dollar cost average and then watch it over next few quarters to see how they perform, and then that's how I'm going to play out. You know, if you're not comfortable, I would rather buy any index that has Meta in it and then play that way. That would be much preferable way than direct exposure to Meta. It's like a lot of volatility with this stock specifically. So I do feel there is an opportunity, but you got to be patient. Um, yeah, so thanks a lot for watching this video. If you like videos like this and if you want me to make more videos like this, please subscribe to channel, press the like button, and more videos to come. Thanks a lot for watching. Hope you invest properly with the proper decision advice. Uh, you know, so I wish you good luck.